Dalmia Bharat, India's fourth largest cement maker, started the year on a healthy note. Realization-led top-line growth along with margin expansion aided the operational performance in the June quarter. Let's do a three-point analysis of the earnings fine print and the outlook on the company. 1. What are the Q1 earnings highlights? Dalmia Bharat's Q1 revenue rose 7% year-on-year to over 2,500 crore rupees. Strong realization in its key operating markets such as East and South drove the top line during this quarter. Cement demand continued to moderate as the volumes increased by just 1% year-on-year. Gross margins were higher on sharp decline in the raw material costs. EBITDA margin also expanded to 26.4%. Steep price hikes at the start of the year drove realizations higher both sequentially and on a year-on-year basis. 2. What's the outlook on the company? The company has started commercial production at its Kalyanpur cement unit. The capacity utilization of around 50% is anticipated to reach 60 to 65% over the next 3 to 4 quarters. The company has also received a go-ahead from the NCLT or the National Company Law Tribunal on acquisition of Murli Industries. However, completion of transaction is subject to two conditions as Dalmia is seeking a reinstatement of its mines cancelled by the government along with the revival of GST incentive by Maharashtra state government. Given the recent slowdown in the market environment, the company has lowered its revenue and volume guidance to 6 to 8% for 2019-20. 3. What should investors do now? Well, driven by large-scale infrastructure projects, the demand for cement has been fairly strong in the last 6 to 8 quarters. However, concerns regarding liquidity squeeze along with the slowdown in government spending pose a near-term risk to the growth of the cement industry. Having said that, despite the recent weakness, the medium as well as long-term outlook remains intact as the government commitment on infrastructure and housing development augurs well for the cement sector. While near-term growth prospects also appear subdued, long-term investors should capitalize the weakness in the stock price right now.